Good afternoon everyone, and welcome to this online roundtable regarding the German industrial and logistics real estate investment market. My name is Andrew Barber, Managing Director of Targa Communications in London, and I am very excited about today's discussion as, before turning my hand to PR, communications and marketing in the real estate market, I was for 12 years a property consultant specialising in logistics and industrial property. I should apologise now that my German is almost non-existent and my pronunciation is generally considered very poor. Please feel free to send questions to me, preferably in English, using the question and answer facility on Zoom. We will try to answer as many as possible over the next hour.
COVID-19 has had a dramatic impact on all our lives, and the pandemic has turned the spotlight on the industrial and logistics market like never before. There has been unprecedented growth in e-commerce and online retailing, which in turn has placed high demands on manufacturers, retailers and their supply chains around the globe. To examine the impact this has had on the German market in particular, and to look at the future opportunities for real estate investors, we have assembled a highly experienced panel of experts for you today who will be providing their views. So let me introduce them. Firstly, let me introduce Martin Czaja. Martin is on the board of directors at Beos, the asset manager and project developer of corporate real estate, which is headquartered in Berlin, has offices in Hamburg, Frankfurt, Cologne, Munich and Stuttgart. Martin joined Beos in 2004 and became a member of the executive board in 2016 and has been the speaker of the board since 2017. Among other things, he is responsible for portfolio management, risk management and capital markets. Having studied architecture at Hanover, Krakow, St. Petersburg and Delft, he spent 2 years as a consultant at Ernst & Young Real Estate GmbH in Munich and Berlin. At the same time, he completed a part-time master's degree in real estate management at TU Berlin, where since 2008 he has lectured as part of the university's real estate management master's program. Our next panelist is Alfred Garbe. Alfred is Managing Director and Head of Germany for Edmond de Rothschild, where he is responsible for asset management in the German market. He has worked in real estate, asset investment and portfolio management for over 15 years, with a particular focus on industrial logistics and office properties. He was part of the successful team at Cording Real Estate Group, which last year became integrated with Edmond de Rothschild Real Estate Investment Management. He previously worked as Director of Portfolio Management and Head of Logistics at Corpus Real Estate. And earlier in his career, he worked for the German division of Hanstein Holdings plc, a British REIT specialising in light industrial real estate, where he was responsible for the acquisition and disposal strategy in Germany. He has also worked as co-head of asset management at M7 Real Estate and was a member of the national investment team at DTZ, which is now Cushman & Wakefield. Next on the panel is Wolfgang Holzberger. Wolfgang is the Senior Investment Manager of Logistics at Catella Real Estate. He joined the business from RLI at the end of last year to drive forward the development of a logistics fund for institutional investors and to build up a portfolio with a special emphasis on investment sustainability. Wolfgang studied law at the University of Augsburg, and he is a lawyer holding a Master of Law in Real Estate Law from the University of Münster. He has 24 years of professional experience of the real estate sector, including 14 years at Real IS, and has in-depth knowledge and understanding of portfolio management and investor relations. Wolfgang is having some technical difficulties this afternoon, and he apologises that he can only join us from his phone, so there is no image. Our final panelist is Peter Wenzel. Peter has been Managing Director at RLI Investors since December last year, having joined the Munich-based investment and asset manager, which is a specialist in logistics real estate, in 2016. He has over 15 years experience in the commercial real estate investment sector, having worked in Germany and abroad, managing property portfolios over the period of the investment cycle. Peter holds a degree in industrial engineering and real estate economics, and before joining RLI, he was responsible for the transaction and asset management of an Eastern European property portfolio at PGIM Real Estate. He's also worked for GLL Real Estate Partners as an asset manager for European and North American property portfolios. Finally, I would like to introduce our lead moderator today, Mr. Charles Kingston, who is CEO and publisher of REFIRE, the online publication about German real estate for international investors. REFIRE was first published in January 2006 and is focused exclusively on reporting about the German real estate market in the English language from the perspective of institutional investors. Charles studied at the University of Dublin and Middlesex University in London and has vast experience of the real estate and finance markets, having worked in the UK, Southeast Asia and Germany. So without any further delay, I will hand over to Charles to lead the discussion. Over to you, Charles.
Thank you very much indeed, Andrew, and very welcome to all our panelists and to all our audience this afternoon. This is the first in a series of discussions through the month of September by REFIRE and Targa Communications, and we're starting off with perhaps one of the liveliest, the most up-to-date themes in real estate this afternoon, which is logistics and light industrial. And I'd just like to compliment what Andrew said there, that while our specialization is the German real estate market, obviously the representatives of the panelists here this afternoon are all working for German European companies and are all expanding with their logistics offerings throughout Europe. So while Germany is obviously the core of where the activity is and where most people are investing in, and the major market in Europe at the moment, we will find out by talking to our panelists what European ambitions they have, and in fact how international the business of logistics real estate has become, and that the notion of being just a small isolated geographically specialized company is practically passé. I'd like to take this opportunity right now, if I could, to just briefly ask our panelists in about 2 minutes each, just to explain to our audience what is their key area of activity at the moment. In some cases, we've got funds coming. In some cases, it's individual asset expansion. But perhaps I'd like to start with Peter Wenzel from RLI. RLI is one of the largest, most established investors in the German market, and is not just in itself a real estate investor, but also is part of a wider grouping with so-called vertical integration. Peter, maybe you might just talk to us for a couple of minutes about RLI Investors.
Yes, thank you, Charles. Yes, RLI Investors is one member of a group of 3 logistics specialized property companies. The first one in our team is Relogis. That's an agency, which is probably now the leading logistics industrial agency in Germany. They were founded in 2005. RLI Investors came in 2013 as a specialized investment fund initiator for logistics property. And since last year, we also have another new member in our team, which is RLI Development. It's a pure development company for logistics property, mainly in Germany, but also in other European countries. So now we're very happy to cover, I would say, all 3 relevant sections in the logistics property industry, which is agency, investment, and development. That in a nutshell, maybe a quick word of where we are right now. We have fully invested our first 2 funds. We have just recently launched our 3rd fund. This 3rd fund, as you mentioned, is also looking into not only Germany, but also some other European countries. As you correctly said, logistics is not a national business. It's cross-border, and it's probably one of the most cross-border businesses we can find.
Great. Obviously, one of the key advantages of being RLI Investors is that you've got both the agency to market, if necessary, your assets, but at the same time, you also have the ability to develop your own assets, which I think you're doing to a certain extent, aren't you?
We are. I mean, we are 3 independent companies. We also have different offices. So we like to do business with the entire market, but still we are owned by the same group. So we do have a short communication line. If we need help from our agents, we get it. We call them up and it's easy. At the same time, if we want to buy our own developed property, we can. We have a right of first look. However, they're not exclusively developed for us. They may also sell on the market, as much as we are not obligated to buy from them. We still keep arm's length relationships to both of those companies. But of course, we do have a shorter communication line.
But for you as a funds manager, this is something that you believe gives you a competitive edge to be able to go to, for example, Leologis for the marketing of it, but not necessarily to have to go there.
No, we don't have to go there, but I mean, Leologis, for example, they have 6 offices in Germany, so they cover the entire market. If we need help, we will get it easily. That is a competitive edge, I believe. But however, we also do work with other agents just as much. It depends very much who's best in the respective market. But also when it comes to research, information of the market, it's a phone call away, and then we get the information we would like to have. That makes our life to a certain extent a lot easier than if we wouldn't have that market insight.
Great. I'd like to call on Wolfgang Holzberger, who can, I think, hear me. Certainly, we can't see him obviously at the moment. Wolfgang, you came some time ago to Catella to set up the function of fund management in the logistics field. Tell us a little bit about that, and also maybe explain to us how easy it is for new. Catella is obviously not a new company, but muscling in on this market that's populated by so many really strong players. What are the challenges specific to your role and to Catella's position as a logistics specialist now?
Thank you, Charles. So this is Wolfgang out of the dark. Sorry for these technical challenges.
I hear you.
I hope you can hear me clearly. And that will hopefully be the only problem for today. Well, I joined Catella in April this year after leaving RLI after 5 years. So I know quite good the market, and I realized that for a European-based company like Catella, they had a lack in logistics investments, and so this could be an alternative for setting up a new fund for institutional investors. Because I see with Catella as a European-based company with 27 subsidiaries all over Europe, that we have a very broad network in achieving and getting research information. So this network would be very helpful and useful in setting up a new fund. And so as this idea became clear, I proposed to the management to set up a first specialized fund that only invests into logistics properties in Germany and neighboring countries. So we got our permission from BaFin to distribute a couple of weeks ago, and we're right now in the process of acquiring equity. But Catella is not clearly new in the market of logistics properties. We had logistics investments throughout the last 4 years, at a small number certainly, but there are already some logistics investments in different funds, so we're not completely new to the market.
Now, with a new fund, what is your focus? Are you focusing on existing assets? Are you looking at speculative development? What is your focus?
Well, I would say a little bit of everything, but the main emphasis is investing in existing properties. As we see a market here with a lot of challenges, a lot of money, and new investors are now keen on logistics properties. So we think that at the moment it's decisive to have good market knowledge and also asset management capacity. So if you have your own research on market data, you'll be able to find properties to invest at a much higher yield than, for example, newly constructed properties. But that's not a must. We would like to have a mixture of everything in the fund, but certainly the existing properties will have a proportion of about 50%, I would say.
Good. Well, you raised a subject there, which we'll be getting back to shortly, which is the money that is chasing logistics properties in the marketplace and where it's coming from. And we'll be talking about that shortly. Maybe we could hear from Alfred Garbe. Alfred, Edmond de Rothschild has recently gone through a sort of consolidation as a European organization. You've in fact brought many of your units together into one. And you've been involved in logistics for quite some time. I know 20-30% perhaps of your assets have been in the area. What is your view on logistics, light industrial, and is that changing from anything that Edmond de Rothschild has been doing in the past?
Charles, as you said, we've integrated our European platform. So I think we are taking a European approach. We've been doing industrials and logistics in the UK, Germany, France, and Benelux for quite a while now. And I think, of course, we see that the demand for logistics is increasing, but we also have our own light industrial or industrial fund where we are focusing more on small logistics and light industrial assets on a European level. We've bought quite a few properties in the Netherlands, and we are more focusing on the core plus risk class, let's say, rather than a lot of other players who are focusing on value add. And we do think there's quite a good opportunity still to generate a reasonably cash-on-cash yield for our investors.
Very good. And Martin Czaja, Martin, you are on the board of directors of Beos. Beos has traditionally been known in Germany as a specialist in light industrial. In fact, you probably invented the asset category 15, 20 years ago in Germany, and we associated the company for a long time with the sort of renovation of close to cities, industrial sites, which were now being repurposed. But you've since been bought over by Swiss Life, which is itself a major investor in logistics. And maybe you can tell us a little bit about how the industrial strategy of Beos works, and secondly, how is this working as part of the new Swiss Life organization?
Yeah, sure. Thank you, Charles. As you told, we are a specialist in industrial real estate. Our definition of industrial real estate contains light industrial and logistics. So we are active in both, let's say, subclasses. And indeed, we started 1997, and from 2002, so over 18 years now, we are active only in this field. We are both. We are developer and manager for this kind of asset class, with a bright presence in Germany first as Beos. So we have offices in all top 7 cities and are very close to the markets. What we do is, we are active in mostly existing buildings, but we also develop new structures in markets where it is attractive. And this approach was very successful in Germany. And since 2018, we are a member of Swiss Life, and the approach we successfully reached in Germany. Now the next step for us together with Swiss Life is to take this approach on the European level and to combine best of both worlds. We have the expertise in the asset class, which is industry and logistics, and we have a local presence over our Swiss Life colleagues in France and the UK, in Switzerland. So the idea is very simple, what we did in Germany to do in Europe.
Traditionally, what the Germans call Unternehmensimmobilie is what the Anglo-Saxons call sort of light industrial. And one of the differences between for example, the North American or even the UK market and Germany is the preponderance of ownership of assets by small, medium-sized enterprise or the Mittelstand. And over the last number of years, there's been a series of, I don't know whether you would call them false alarms, but that sale and leaseback is coming back, and that this is an area which is a wonderful opportunity for German and other European companies to, in a very cost-efficient manner, to release fresh capital from assets while still long-term retaining an interest in the assets. In contrast to the other markets, particularly America, most Americans own their own homes but don't own their corporate assets, whereas in Germany we tend not to own our own homes and we own the corporate assets to a large extent. Is there would you say that sale and leaseback is becoming an issue here, or is it too early to talk about that?
Well, I wouldn't say that there will be a comeback of sale and leaseback, because sale and leaseback transactions are all the time there. And this is one of our main sources for new products, to buy properties from corporates. So it's first, nothing new. Second, it's still there. And third, yes, I believe it will be not a comeback, but we will see an increase of sale and leaseback transactions, because yes, I believe personally that the COVID-19 shock will lead to more transactions of this kind.
Okay, well, that's a good way for us to latch on to what Andrew said earlier on about the general background of COVID in which we're finding ourselves now. So maybe we can just open this up a little bit, and I'd like to ask you all specifically, like, how do you feel that COVID has affected the market? Everyone is talking about logistics as being one of the great winners of the COVID crisis. As the others go down, retail suffers, and hotels are closed and don't look like opening anytime soon. Taking a macro view, what would all four of you believe is the likely effect of all of this, both in the medium and the longer term, on logistics real estate? Alfred, maybe I could ask you, but please butt in by any means. All of you butt in if you've got something to say. Don't wait necessarily to be asked by me, because I think, as far as I know, with Zoom, the camera zones in anyway on who's talking. So please chip in whenever you've got something to say. Don't wait for me necessarily. Alfred.
Yeah, I think that our general outlook is positive because of the structural changes towards e-commerce, of course. Onshoring is another topic which I think, as a result of COVID, will gain more importance. Having said that, I also do feel that we are looking at a recessionary environment, and therefore general demand in some parts of the industry, and a very important part of the German industry, automotive suppliers, might change or might decrease to some extent. So in my mind, it's not all positive, but taking into account the plus and minuses from increasing demand in e-retailing and e-commerce, and from onshoring and changes in the supply chain, and the negatives from maybe decrease in demand from the traditional industry, if you want. I think overall the trend is still positive.
Peter Wenzel, are you experiencing something similar in terms of the mix of the makeup of the clients? For example, as Alfred mentioned, automotive, perhaps Maschinenbau are struggling sectors. These are areas that are shifting up the mix, basically.
I mean, just looking at our portfolio, it's not the industrial clients that have expressed issues. The discussions we had, it was maybe 3 or 4 in total tenants. They were more from the retail industry. So whoever had to make their money selling goods in stores, they were a little strapped for cash. Of course, they had the warehouses full and they needed our space, but they still expressed some concerns about liquidity. I mean, by now that's all gone. None of those discussions are still ongoing. So nothing really happened to our portfolio either. So I think in logistics, we're in a very comfortable spot. But the short-term effect that we saw so far is more from the retail side. I mean, I know everybody's always talking about automotive and the difficulties that they have. They haven't arrived yet in our portfolio. It may, but it's not visible yet.
And Wolfgang, when you came to Catella, everyone was raving about logistics, and everyone was piling into the sector. Now, this is obviously going to have effects on the sector in terms of the wall of money that's being thrown at it. But would you say the feel-good factor has increased, decreased, stayed the same since over the last 6 months at Catella?
Oh, definitely. There's no question about it. Also, that's what we get as a response for our first interview with possible investors, that they still are very much into this asset class. And also looking at our portfolio with Catella, it's also a portfolio of 100 million euros investments. We had also no similar developments like Peter mentioned. I think the market has been quite stable so far, and compared to other asset classes, much less issues became aware throughout the last 6 months.
Martin, your funds, since you started setting them up about, 10 years ago, 8, 9 years ago, have all been massively oversubscribed, as far as I know. Is the enthusiasm, the optimism as bubbling within Beos and Swiss Life now for the sector, or are we all buying into a huge amount of hype?
Well, we are very happy to be a specialist in this sector and this asset class because, as we see, there is increasing demand from the investor side for that. There is a strong shift from we know it all from retail, from hotel to residential and to this special asset class. So yes, we are very, very happy about that. I wouldn't call it hype, but very strong demand for this kind of products. So yes, we see good opportunities in the market to fund money for this kind of products and to find the right properties for that. So the market is the prices are increasing, sure. But there are still products you can find and you can invest or you can pool the funds.
Well, certainly the prices for land have been rising very strongly, and this, of course, pushes up generally the prices of logistic assets, whereas the rents have not been rising commensurately. So the question to all of you basically is what would be the effect of all this money if there are other investors shifting from certain other asset categories into logistics, and they're all chasing money. They're all chasing the same assets, or trying to expand the market through development, for example. What are you seeing out there in terms of multiples being paid for assets? Are prices getting bubbly? Are they getting too frothy? What would be a fair price to pay these days for a good asset, and how would you define a good asset? 22, 23, 27, 29 times annual rent? What would you all say? Alfred?
Well, in my mind, I don't think that prices will increase much further. I think we are at a pretty toppy level. But I think more important really is that you are in the right location and that you do have a good and flexible asset in the long run. What I think is a bit more difficult with a lot of money chasing assets is that you are you might concede on location or on the asset quality in order to get invested, and then for some of the assets and for some of the locations, I feel that prices are quite steep. But generally speaking, if the asset and location is okay, I think in comparison to the pricing of other asset classes and bond market and so on, I think generally speaking, price levels are not bubbly, but I also don't see another increase from where we are right now. In my point of view, that's for logistics. And as I said, I mean, we are more doing small logistics and industrials. And in that subsector, if you want, we are not talking about 4% or 4 to 4.5% gross initial yields, but more about 6% gross initial yields. And I think again, if the asset and location is in a good position, that's a reasonable pricing, and there might even be a little bit of yield shift left depending on where we are generally going with the economy.
6%, Wolfgang. When you're out there looking to transact on the marketplace, and you're promising 6-7% to your investors, is this realistic?
From my expectation, this is quite challenging, but I agree with Alfred that it's possible in some markets and with some assets, but probably these assets will be having special requirements. Maybe with a light industrial, it would be possible. For our fund, we're not focusing on these assets because they are too rare to find. But generally speaking, I see that there has been a slight rise in pricing throughout the last 6 months, especially when it comes to, as I call it, easy logistics investments. For example, newly built properties with the long leases of 10 years plus. There, I have observed a slight, or maybe even more, raise in pricing. I've heard of multipliers of 25 and 26 in the market, which are horrible from my point of view, especially taking account our current fund and the expectations that we have. I would not getting involved in these kinds of bidding processes when it's with international investors focusing on 26 or 27 multiplier. But there are other investments available around 20 or 21 for newly built properties. That's my expectations, and that's what I'm negotiating at the moment. It's a really difficult market at the moment, and it's, from my point of view, quite difficult to predict. I would raise the question whether the yield spread between, for example, offices and logistic properties investment, if it's really going to be the same like it has been throughout the last, let's say, 10 years, that there has been a spread of 200 bips. If that will be the same case in the future, that's an open question, I would say so. And I'm interested what the other gentlemen in the discussion round here think about this.
Well, I see Martin Czaja smiling with obviously quite a wealth of experience and recognition there when you're talking about those sort of frothy prices. Martin.
Yeah, I agree with Wolfgang. 25, 26 multipliers are horrible, and we do not participate in this kind of processes as well. On the other hand, you mentioned that, Charles, the land prices over the last 5 years only increased by 30% in Germany for this asset class. So assuming the demand will still stay so stable and so strong, I believe that the land values and the values will increasing in the future. So I agree with the forecast that the prices, that this is not the end we have now. We will be closer to office, to residential. And for us, interesting is always the differentiation between logistics and industrial, because as Alfred mentioned, we have now 5-6% for industrial and 4 to 5 for logistics. But if you look over years, industrial was always following in logistics. So that is our expectation that the prices also in this subsector will grow. And yeah, I don't know where is the end, but if we want to deliver yields for investors about 4 or 5%, we won't be able to pay 25, 26.
And Peter, you're up against these constraints every day as well with your funds. How does RLI go about this?
Absolutely. I mean, I entirely agree with the rest of the panelists. It's everything above 25 feels horrible. So I fully agree. But I also think we've seen logistics catching up in yields with office and retail over the last couple of years, and I think rightly so. There has been a trend in the society to use more logistics space by ordering online. Now, what I think COVID accelerated that trend to a certain extent. So everything that's logistics, last mile logistics or whatever serves online business, that land that would be close enough to bigger urban areas, as Martin said, is increasing in price dramatically. And I think that especially that trend is going to be accelerated even more through COVID, because people are worried to get out of the house. Now, we have a lot of money now pouring into that asset class because it seems to be fairly stable compared to other real estate classes. So my concern is a little bit that we, thanks to COVID, see a bit of an exaggeration in prices for those seemingly very stable asset classes, logistics and close to urban areas. So, I mean, I very much hope prices don't increase, because if you look into history, I think not even in 2007 did we see yields like that in none of the asset classes. So I think when it comes to economy cycle, at the top of the cycle, now how do we cope with it? Well, one thing I mentioned earlier, we built up our own development pipeline so that we don't have to only go out and compete on the market. On the other hand, just as Wolfgang said, we and Martin too, competing in a bidding process in the international agencies, where you sometimes compete with Asian money that just tries to buy into the market regardless of what it costs. We don't like to compete with that. So what we have done as RLI, we've worked over the years to establish our brand in the logistics real estate industry, just like Beos did and many other specialists in the field. And we do have our grown network, how to acquire buildings, which don't come through bidding processes. So I think those are, I would say, two ways of trying to keep our purchase prices acceptable and deliver our yield to our investors. And the last way we cope with that is, of course, leaving Germany a little bit with our new fund. So we're looking into other countries with more attractive yields that still have an attractive economic outlook. We find those countries, especially in the east of Germany. But yeah, nobody's independent from the market, so we all have to deal with it.
Well, I mean, you speak to the actual subject of the real estate asset itself, because in addition to all of you moving outside of Germany or expanding into other markets, what seems to be going on is that COVID is leading to a basic rethink of the whole process of globalization, and if you want to call it deglobalization, it's also at a macro level, at a micro level, leading to fundamental changes in the assets themselves, so we could start talking about different usages, for example, of assets. But take, for example, the real effect that all four of you are seeing in terms of onshoring, as they call it, or moving the markets, moving the logistics markets, or logistics assets closer to the markets. What effect is that having in concrete terms? Wolfgang, maybe you could tell us something about your initial experiences on this.
Well, I have only read about this in the newspapers or our market reports, but haven't heard of any certain contract that has been signed, for example, that could be called under the category of onshoring. But certainly I expect that to happen, because COVID made it very clear that the resilience of the supply chain was not always as strong as we thought it might be. So the aspect of safety in terms of supply is now getting higher, will be valued higher. So that will lead certainly to demand in spaces, in logistic spaces, and that specific area. And well, the onshoring question is still open, because I think it's still unclear in which markets these productions, for example, then should be reinstalled again, and if there's enough. The job situation is also critical, and the level of salaries to be paid. So it all leads to the question whether these changes will be accepted by the consumer market, because higher prices in our current economical situation is nothing that the people want to have. And so this issue, I think, is still quite difficult to say for the moment.
Martin, talking about what Wolfgang has just mentioned, proximity to the market, Beos has always been closely associated with the last mile, or shall we say, you weren't necessarily getting into it as a last mile provider, but now the whole business of last mile is in everybody's vernacular. So they're all saying, how can we get assets that are close to the center, that are close to the urban centers? How difficult is it going to be for investors like yourselves to find assets that meet these specifications? Same question goes to all of you, Peter as well, and Alfred.
So our experience at Beos is that it's very hard to find these assets. And the best way for us is just to work with existing assets we have within our portfolio, and to add new structures to increase the density if the location is right. And I would say we still need higher rents, for example, for urban logistics, and I believe we will get higher rents to be able to build structures and develop structures that are a little bit more complicated and for that reason more expensive, but there is no more place. Last mile is last mile, so you have to be so close to the customer as possible. And my expectation is that it will lead to higher rents and to different structures we see in Asia and still done in Europe.
Alfred.
Yeah, I mean, I completely agree. I think what is very hard to find is new development. And I don't think this will change dramatically. I mean, for developers, it's much more interesting in terms of margin to focus on big and not so close to town developments. And therefore, I think the development pipeline will will not increase dramatically in these locations, and therefore you have to work with existing stock and refurbish existing stock. I think especially when you look to German cities, but probably also on a European level. And I also agree that if you look at the rental level, it certainly has increased already over the last couple of years, but I completely agree that there's still some way to go, because if there's increasing demand and little availability of space, and it should definitely lead to increase in rental prices.
Okay. Peter, I know we could go on and talk for hours about new technology related to real estate. You're talking robotics, drones, driverless lorries, all sorts of stuff. We don't want to necessarily go down that route today, because frankly, it's a Fass ohne Boden. Actually, it's a bottomless pit. What about for example, I'd like to just briefly get back to a question that I asked earlier on about the barriers to entry, the difficulties for smaller companies to, even in REFIRE, we've reported in the last number of months on several new players coming into the marketplace in Germany. How likely are they to be competitive against some of the big established players who've been around a long time? How difficult is it going to be for them to move in and have a level playing field up against all the experienced players who are in there? In
what business exactly? Investment, development?
Investment, coming in, investing in existing assets. Are they? Is there an opening for niche players in this market, or are all the advantages at the moment going to the big players? In other words, is there a concentration of chances, opportunities going to the bigger players? And RLI would be one of the bigger players also in the marketplace, as against, say, the niche players. We've seen some French, Belgian companies coming into the marketplace. Over time, I know the foreigners have been withdrawing, in fact, from about 2-3 years ago, when the market was at its peak in terms of transaction volume. The foreign investors played a bigger role than they do. Is this because why are Germans, in other words, Germans are stepping up to the plate, along with people like the Asians, who are used to paying higher prices, but German investors like yourselves are also increasingly dominant in terms of investing in Germany itself. What are the chances for the smaller players?
Well, I think smaller players coming into the country from abroad, I think that's difficult. Germany is not a very transparent market. If you compare that to the UK or the US, it's difficult to find product here if you don't know also the small local players that oftentimes don't have many international contacts themselves. So what we see more in the market is competition actually coming from even bigger players, the multinational asset managers that never really looked at logistics because that was dirty and boring and all. And now all of a sudden they come up as, oh, now we also need a logistics fund. And they throw a lot of money at that topic, and also not exactly knowing what they're doing. But they just go the way that, I take the Asian investors now as an example, but they're not the only ones, that just try to get a foot in the door by paying top price, competing in the long processes. So I think that's more where the competition is coming from. Small foreign players in Germany, I do think it could be hard due to the intransparency of the market.
Alfred, I saw you grimacing, also smiling there ruefully, as if it struck a chord of experience with you as well. What do you say?
Well, I mean, in fairness, I have to say, I think the Asian investors have been in the market for a while, and they've probably we've also seen them selling some especially small logistics assets at a good margin, and also bigger logistics assets. So I mean, I think they've been there for a while. Of course. I think their way of thinking about logistics and the price level they're used to is different. And I also do think, and that's just natural, the way things are for the big investment managers, they need an allocation in the asset class now that the asset class has been more established. And therefore, of course, this is become more important, and also moving the prices in the way it is. And some of the foreign investors probably are realizing that prices have now come to a level where it's quite toppy even for a more established market, and are focusing on their own home turf again. So that's my feeling. But I think for niche players or small players do actually have a very difficult position at the moment to compete with the pricing where we are.
Well, talking macroeconomically, in fact, there are two issues here which we would briefly like to raise while we're having this discussion in any case. The first is growing tensions between the US, obviously, and China, but increasingly also Europe and China. What effect is this likely to have in European logistics? And we're talking above and beyond just Germany here, although Germany is the biggest market, will also be affected by this. But China's one road, one belt policy is obviously for the Chinese something that has given a major boost to logistics over the last number of years. What would any of you feel? Wolfgang, I'd like to ask you this first. At a macroeconomic level, are there likely to be repercussions for that in logistics?
Well, this is a very difficult question for me to say. Yeah, the threat out of the situation that you described is for me quite existing. And if tensions grow, then we will see definitely a negative outcome, especially on the German car producing industry, I would say so. But it's likewise a problem for the Chinese too, because it's not a one-way street. And if they are not able to sell their goods to the European market at the same prices or margins as they did before, they also would suffer. So I think this scenario will hopefully lead for both politicians of both sides to come to reasonable agreements. To be more precise, I really don't think that I'm at the moment capable of giving a fair estimation. This is what I have to say about that.
Martin, within Beos, you obviously discuss these macro issues all the time. They do have an effect on demand. There's another issue which, of course, Germans rightly enough have largely treated with contempt in the meantime, and that is the Brexit issue, which is coming up at the end of the year in real terms for the British, and we don't know yet whether there's going to be any sort of a deal or not. But how, for all of you as logistics players, what if anything, are you thinking about Brexit at this point, and what effect could it have in terms of increasing demand on the continental Europe for logistics assets, or what effect might it have? Peter.
Well, to be fair, Brexit so far has not been a big topic for us, because we didn't look into investing in the UK yet, and on the other hand, we didn't see any changes. I mean, the discussion has been going on since 2016, and we didn't really see any effect.
But in terms of supply chain, in terms of the going backwards and forwards and so on, this will obviously have an effect. The amount of times a car part in Sunderland, for example, gets imported, exported, re-exported, re-imported into the car factory, obviously is going to have an effect on how people in continental European countries think about logistics and supply chain.
I'm sure it does. It's just that we, as a firm in our portfolio, we simply haven't seen it yet.
Yeah. Alfred, is it something that the Rothschild discusses much?
Oh, to be honest, I share the same view than Peter, that at the moment it's hard to say. I agree that there will be some consequences out of it, but we also couldn't tell if it would mean an increase or decrease, and with our portfolio it doesn't make a difference at the moment.
I'd have to say, Andrew, and I'm very sorry to say this, Andrew, but it is a general reflection, funnily enough, on how the argument seems to have moved on within Europe. I know that a couple of months ago, Angela Merkel sat down and she answered questions for 90 minutes sometime last year, before the British had actually left, and it was a free-for-all, and journalists could ask her anything they wanted, and the issue of Brexit didn't even come up once. Perhaps as an indication of just how the issue has now moved on way past people's concerns.
I have a question actually, which has come through. Because obviously we're getting towards the end of our hour. It's come from Libor Vincent, and he wanted to know whether the positive trend that we're all seeing and talking about in logistics is being reflected in the volume of transactions to occupiers. And I wonder who would like to answer that. Maybe Wolfgang, could you answer that?
Could you please repeat?
The question really is about the positive trend that we've been talking about in logistics in Germany, and whether this is reflected at the current time in the number of transactions that are happening.
Well, from what I've read in the market reports of the brokers, we see that the investment market in logistic properties, despite COVID, has been at almost the same level as it was last year, maybe even a slight rise. So it proves that investors still have confidence in that market, and also the price level that we were discussing. Just remember, 25-26 multiplier reflects that, and I think so that there's a strong demand on logistics properties, and also reflects to transactions being undertaken throughout the last 8 months.
Okay. Another question was the geographical areas, countries in Europe, also regions in Germany, which are most likely to benefit, in your view, from the boom in logistics. And maybe I could ask that to Alfred.
Well, I think Berlin is very much in the focus and has been for a while, and I think for a reason, because there's quite a big demand. But actually, when we speak to the occupier side, there's big demand close to all major German cities, really, and a lack of supply. So I think maybe, you could argue, as we've talked about earlier, that the strongholds of the automotive industry, there might be more vacancy coming to the market, but that's not something we've seen at the moment. Actually, demand still exceeds supply, and I think for all top cities, the demand will increase. In my mind, it will be quite interesting to see where you can find resources and staff for logistics in the future, and that might be a driver also for bigger occupiers, and that of course isn't then related to the big cities.
Okay. Thank you. Peter, would you like to pass comments on that question about hot locations, as it were, not necessarily just in Germany, but anywhere else you feel may be benefiting?
Yeah, definitely. I mean, there are some trends, as we mentioned China before. We have this new Silk Road that ends in Duisburg. So I think that's increasingly becoming relevant where that Silk Road train stops. And we mentioning Berlin, absolutely true. But I think it's not only Germany around Berlin that's benefiting, it's also Poland. Because if you don't have to be super close by, it's probably easier and cheaper to do your logistics on the other side of the border. And that is probably true along the entire German, Polish and German-Czech border. That in many cases it's more cost efficient and almost just as close as if you were inside of Germany.
And that's even before the Tesla factory gets built, which is halfway between Berlin and Poland. Yes.
Yeah. And I mean, again, what also I think Alfred mentioned, labor. It's we've seen in south of Berlin, with properties there, tenants told us, well, yeah, nice location, but we don't get labor here. So we have a hard time renting more space. So I think that is definitely a topic, and we will probably in future look at future hotspots where labor is actually available at the price levels that logistics companies can pay, or we increase automation drastically and not need so much labor anymore, which may also be in effect accelerated by COVID.
Okay, thank you. If anyone else has any questions they want to submit to us via the Q&A or F&A button, I think we've got a minute or two left, so fire your questions at me.
Well, if we're waiting for one, and if I may just interject before we close up then, Andrew, a question to Martin. It all looks very positive for logistics, and I know you guys are figuring out where the future is on all of this. But where if you see risks in this sector, where would you all see the most likely risk coming from? It looks as if for the next couple of years, logistics is going to be Germany's new darling, and everyone's going to be piling into it for a while. When you think of risk, what do you see?
You're on mute.
I was muted.
Sorry, Martin. Sorry. Yeah.
Very, very good question. Thank you for that. Yes, I do see risks in the mid and long term, because now I think it's very simple to see all these trends we have about big box and about increasing e-commerce and so on. So the demand for logistics space is growing on the one hand. On the other hand, I believe that let's say, the same way interesting trend is what we see in the industry, in the producing industry. Because I believe that the time of mass production will be over within a few years. And the whole production and value chains will change extremely. And we want, it will be no more needed to have a huge production sites in Asia and China, I don't know. And I believe there will be a strong shift to smaller decentralized production, development and production and logistics sites that will be very close to the consumers. So I believe now we are talking about increasing demand in logistics, but in a few years, and we see it in our portfolio now within tenants who try to get so close to the city as possible, who think about not logistics space, not production space, they call it, and we call it flex space, whereas so the flexibility of space is very important for us always, but I think it will be even more important in future to be able to react on different requirements from the tenants. And talking about locations, and Alfred and I thought it's very hard to find the right locations if everyone wants to go to find a place and locations close to the city centers. We have to think about new kinds of mixing uses, about mixed use within the commercial uses, but maybe also in combination with residential and with retail. So new types of buildings that allow more density and I would say that the mix of uses that today do not come so close to each other. But I believe we will have to do that. For example, urban logistics and residential. I think with new kinds of mobility, it will be possible, and we will to realize that to be able to deliver the space to all the users who need it.
Thank you. That's very, very good. Wolfgang, your assessment of risk, and it's obviously going to be a different one to the light industrial specialists who are focused on flexibility at all costs, including getting mixed use. There is mixed use, obviously, in bigger box logistics, but what keeps you awake at night?
Well, when it comes to light industrial, that's your question? Production properties, or?
Actually, I'm thinking more in terms of logistics assets, bigger
logistics assets. Okay, okay.
What keeps you awake there at night?
Well, what keeps me awake at night? The challenging times certainly keep me awake, and extending the network and finding attractive investment chances. That's the challenge. But also observing the market and the development of the lease prices. That's something that keeps me awake. At the same way, having a close relationship to the tenants, because that's what I think a key issue of success. If you're not close to the market of the user side, then you're far away from the relevant development. So we at Catella here do a lot of research and try to strengthen our tenant network in order to get the relevant information, and that leads us to a certain investment strategy that will be established in our new fund.
Excellent. Another clear statement. Peter, anything that bothers you? Anything that when you look at the risks, you think that that there are things that are being underappreciated by the marketplace?
I think when I look at the property, nothing really keeps me awake at night. When I look at price levels and the economic cycle, I would be, I sometimes scratch my head if if we see another situation like we did in 2009 and 10. I've been heavily involved in workout portfolios. I've seen what can happen if the prices go the other way. For me,
what you're saying is we're not in a comparable situation, at least in this asset category.
No, all the asset classes would be, but I think from an occupier side, I think we will see growing product diversity, which then also leads ultimately to a little higher demand in space for production products as well as finished products and replacement parts. If we find different production methods, maybe that has an impact, but I don't think occupation is the topic. I think midterm, we need to see if our pricing level at the moment is sustainable. I think.
And Alfred, you get a chance to say something on this as well, Alfred. And then I don't know whether Andrew's got other questions lined up, but talk. I would say talk, Alfred, and we'll see what Andrew's got.
I just think in a recessionary environment, it might be that also the occupiers have less money to spend, and therefore maybe it's harder to get to the ERV, even so, the demand might still be there to fulfill your business plan with speculative developments. And therefore, I think there's to a certain extent a risk that the assumptions won't be fulfilled if you're too aggressive with assumptions on rents you might get for new build and looking at the general economic situation.
Very good, good. Andrew, we got...
It's not really a question. It's more of an observation, and it comes from Johannes. And I'm going to apologise again for my pronunciation. I think it's Noldek. But he says the problem is that most cities don't want truck-based logistics. They all want train and water-based traffic and lots of employees. And new land for logistics is scarce. And I think that is a common problem which our panelists have been highlighting, Charles.
Well, I think if we were to go on with this conversation, there are a lot more things we could bring up here, and I know I'd like to continue, but we did say we tried to keep it to an hour. So, unless there's something else from you, Andrew, and from my side, I'd just like to say we only touched on certain subjects here. I hope we can get a chance to go into these again, perhaps in another session like this. But it's very interesting to get 4 such different views and such qualified views on what's happening in the market. So, thank you very much indeed to our panelists, and I'll give it back to you, Andrew.
Yeah, well, I'd also like to thank everyone, all our panelists, Peter, Wolfgang, Alfred, and Martin. Thank you very much, and Charles, thank you very much as well for steering us through this discussion. I'd like to thank everyone who has stayed with us. It's well over the hour which we said it would be. Could I just take the opportunity to remind you all that there is 2 more Investing in Germany events lined up that we'll be hosting again with REFIRE. On the 23rd of September, we have a roundtable discussion focused on real estate debt. And then on the 30th, our 3rd event will be focused on the German office market. So thank you again, everybody, for your time. Stay safe, and we look forward to speaking to you again soon. Thank you
all very much. Yes, indeed. Thank you.
Thank you.
Thank you.
Thanks a lot. Bye-bye.
Bye-bye.
Bye-bye.